Good morning, traders. Thank God it is Friday, last day of the month of August, and the Friday before a long US weekend. A lot of the US markets will be closed on Monday for Labor Day, obviously. So players could be tempted to square up a few positions before the weekend. But before that, we will have, of course, some more data out of the US and also the last month end fixings. We'll have a look at that in a few minutes. So before we start the show, our usual ads. We still have our 40% discount running on monthly subscriptions. I've been told that next week could be the last week that this discount is still in place. So for those who have not yet joined our community and would like to do so, hurry up, I would say. You could also still put your name, for those who haven't done it yet, your name and email address to be on our newsletter mailing list to be kept up to date about all the changes that are going on in our community. Also enlisted in a sweepstake to win one of our trader funding programs as well. So there are a few goodies there. Also, I think one of your free coaching session as well, I think, that you can win this month. What else? The trader funding program, yes, until um, September the 1st, which is next Monday. There is a 30% ongoing on the trader funding accounts as well. Whether you want a direct live account or the one-step assessment, you can enjoy 30% off of those trader funding programs for a very limited time. That's it. Let's move on to what's happened overnight. And actually, in regards to what is really market moving, not a lot has really, not a lot of news really came out, but the one that is still keeping us occupied and a lot of politicians obviously occupied is the Ukraine-Russian situation, which is absolutely not improving. The Germans have said that there might not even be a Zelensky-Putin meeting upcoming. The situation is just that bad for now. The US has expressed its support, potentially even helping for air defense, etc. But especially the Europeans are now gathering around Ukraine to show their support. Sweden said that they could make contributions in air or maritime domain defense. Even the Belgians are not excluding to send troops on the ground in UK. I don't know how many my dear Belgian fellow soldiers we have, but won't be many, I think. Um, and against that, even though it's not improving, and actually on top of that, I should say, Putin, Xi, and Modi are planning a meeting in China on Sunday to discuss their energy partnerships. Modi will continue likely to buy Russian oil. Actually, the sanctions or the 50% tariffs on India came into effect today. In case you missed it, US has slapped another 25% tariffs onto India because they're buying of Russian oil. So they are now paying 50% of tariffs. And the discussion then on Sunday will also be around China to open a gas pipeline coming from Russia for Russian gas to find other outlets than Europeans, for instance. So on that front, nothing is actually improving at all. Other headlines in Asia, US Senator Wicker is over in Taiwan, and the Taiwanese president, of course, is expressing hopes to increase the security cooperation with the US. Wicker said that the long-term friendship with Taiwan is still very much standing, and that Taiwan has the right for self-determination. US has not officially recognized Taiwan, but this is a step towards not dropping Taiwan, which was a risk that had been expressed a little earlier, or well, a few weeks or months ago, by Trump or his administration, that they may not do much for Taiwan. Sending their defense head over there is probably a better sign for the Taiwanese. Other geopolitics, there is this E3 sanctions back onto Iran. Just give me 1 second, please. I need to do something. Okay, that's done. Just needed to hedge something. Yes, so back onto that E3 and Iran. They put new sanctions onto Iran because the Iran is still not cooperating on the nuclear side of things. US also supports this snapback onto Iran. It does open a 30-day window for negotiations, diplomacy over there, but there as well, this geopolitical situation is not improving, and that is one of the reasons, in my opinion, that going into the end of this week, we saw gold also enjoying continuous support, although it's stalled a little bit. But I will talk about gold today because it's rather interesting again. Elsewhere, also the postage, the de minimis exemptions from tariffs came to an end today. So from today, even those smaller postal packages to the US will be tariffed. There is a discussion going on that they may kind of change those tariffs a little bit, but for the time being, they are relatively simple, but pretty high tariffs on those small packages as well. We know that there's been a big shipping of those smaller packages, whether it be from Asia. But also from Japan, for instance. So that is something that we need to take into account. It may be that these shippings may fall off a cliff a little bit, and that may impact the trade situation. And also, if all that shipping drops off a cliff, it may not bring as much into the U.S. coffers as was anticipated. I think they was it something like 10-15 billion dollars also expected in tariffs from that. But if you don't ship much anymore, those tariffs will those receivables will obviously not be there. What else? Okay, I think on the geopolitical side that is done. Um, Moving over to China again, the overnight PBOC fixed their dollar China a little bit lower, but we haven't seen it really back into the dollar CNH move overnight. There's a lot going on about this dollar China coming off, and the Chinese yuan, the PBOC letting the Chinese yuan strengthen a bit, and then the correlation. And also Gregor spoke about that yesterday on our Face show about the correlation between the stronger yuan and potentially the bid in gold as well. Has to be said that yes, gold is higher, and yes, they can do their flows outside of their own time zone. But over the past sessions, it's not really been Asia that has been the driver for higher gold. We see rather the US session being buoyant for gold. So we will need to monitor numbers again of what's happening in the gold reserves in China and Pan Asia actually. It's not only China, obviously. It's also with the Chinese yuan impacting a lot of trade in Asia as well. We have to see about the Pan-Asian numbers for the gold buying and gold reserves over there. So that is something. It is there, probably it is there, but also if the Chinese yuan would actually weaken a little bit from here, just by market moves and market flows, it may actually stall gold a little bit. Um, and then we are going over to Mr. Waller was on last night as well. He expects the Fed to cut next month and more cuts to follow, and even not excluding a 50 bps cut by the FOMC in September if the next job reports shows another weakening. Okay, we know that Waller is one of those who threw his hat into the ring for being the next FOMC chair to replace Powell. So there's absolutely no surprise that he is talking very dovish right now. Yesterday we also had the ECB minutes out. Mostly as we know already that the interest rates are in broadly neutral territory. There is still a lot of uncertainty and a lot of risks in all the outlooks, and but the main line there is that they are maintaining the policy rates at current levels to give them more time to see how trade develops. And then the funny line to end that summary of lines was that the communication should maintain a careful, neutral tone and be deliberately uninformative. So they really don't want to stick their neck out for anything at all. So that was the funny line to end that little summary there, or the minutes of the ECB prior meeting. We also had just a few minutes ago, we also had the consumer expectation survey out for the month of July, the ECB survey that is, and those perceptions of inflation remain unchanged, really. So the median expectations 5 years ahead, the 3 year increase slightly, but for main expectations, they largely remain unchanged. And then I'm looking at headlines, and I think I'm already done for today. So that's nice. That will give us a more time to talk about what is going on in the market, the data that we had, and let's get back quickly to the data yesterday, because we had a few questions in our room as well about why the dollar is not really going up much, despite or going up at all, depending on the currency that you look at, but why the dollar is not that strong. So we had this better than expected GDP data for the Q2. Also, the sales were doing much better, but we have already spoken about that. There was still a lot of pre-tariff negotiation activity in the economy. And has to be said, we are end of August now. These are Q2 data. This is what happened, not really what is happening right now. So the market pretty quickly shrugged that one off. We did have a bit of an improvement again in the jobless claims, and I said keep an eye on that continuing claims. Well, nothing really alarming there. It actually improved again a bit on the week prior. So that is there's nothing to hint at employment in the short term, at least, falling out of bed. But we've seen that those numbers don't always reflect what is happening in the NFP's report, which will come out next Friday, of course. But again, the main reason is that GDP is back looking, and also let's not forget what I've been saying already over a few flow shows, that we are in month-end territory, and there are flows that you may not expect coming out, and one of those flows I'm going to talk in a few minutes as well, because there's something interesting really happening in the sterlings on the sterling side of things. Then we had the short end here, the bills auction, but then the 7 years, well, not a lot to take away from that auction. Moving over to today, weak-ish weakish data, especially the Tokyo CPI is coming back lower. That's not going to improve the outlook for the Bank of Japan. Although, if you look at the employment situation, still very tight. Okay, still very tight. The unemployment rate came down. The jobs to application ratio remains extremely tight as well. That number has been hanging around this zone for ages, but unless this starts to move higher, we this number is still remaining extremely tight, obviously. So that is a bit of a counter balancing that lower CPI. Australia saw some housing data. I thought there was something coming out on the Kiwi, but maybe I missed that one. There was one of the Kiwi indicators came out, but that's not showing on here. Japanese household confidence numbers were a little bit higher, but still at levels that are comparable to where they were before. Big drop in construction orders there, but again, I mean, if you look at those construction, those also those industrial production data and industrial output in Japan, they are pretty volatile data over there. So not a lot to learn there. Swedish GDP, again, Q2 numbers, backward looking. The retail sales were pretty okay for those who keep an eye on the Swedish kroner. Those are still relatively okay over there. And then we're coming to the German data and what came out today. We had a slew of data coming out of Germany, the rest of Europe as well this morning, but especially Germany produced a number of data. We saw prices here coming down a little bit. Retail sales, okay, lower. The month on month was actually a pretty negative number there, but may also be it's July. There was a lot of uncertainty around tariffs, still around everything that happened in coming into with the German economy, etc. July, but we have seen since then different numbers that show a bit of a different picture. So this one is probably not going to call it a one-off, but still showing that Germany is not out of the woods yet. But as you can see, it's been hopping above and below that neutral line for a while now. So it's a bit of a number that goes from month to month. We need to see a streak of numbers picking the same direction to really know how the German consumer will be feeling further down the road. Just sticking with Germany before I go back onto other numbers. We did have the unemployment change, which showed a better picture than the expectations were, which is pretty okay. 19,000 difference versus the expectations, and also the German head of labor said that he feels that the economy is bottoming out. Merz, in turn, said that the data that we have seen so far show that they still need reforms in Germany. So things are not completely out of the woods there, but the employment picture doing better could show indeed that Germany may start to bottom out. The unemployment rate did not change so far yet, though. And then we had the German regional states out. We also expect the pan-German CPI number out later today for August. And they showed pretty much uh, a picture on the year-on-year that are in line with the expectations for a slight uptick on the pan-German year-on-year number later out today, but the month-on-month are slowing, okay? They are slowing, okay? So as you can see, they are pretty much flatlining on the month-on-month data. So that is something that we will need to keep an eye on, because we could have like those year-over-year effects coming into play. The market on the back of those German data were trying to buy a few euros this morning. I still think a lot of month end is in there. And we will see what happens on the US PCE data later today to have a closer look at what's going to happen with the euro, because in fact we're still in those ranges. Okay. We also had those French GDP data out, as I said, Q2. French non-farm payrolls, they have that one as well. Came out slightly on the positive side, but not a lot to mention there. I didn't see the cough leading indicator out at all. Official reserves ticked up a little bit. But those are the July numbers still. We are nearly end of August. So next week, I think the S&B will produce the official reserve numbers for August, just to tell us whether they have been involved in the Swiss franc at all this month. All right, what's to come? Portuguese data, as I already mentioned, the German CPI, and then we have obviously those US PCE data. Okay, they're expecting to tick up slightly, in line, consistent with the numbers that we have seen coming out on the inflation side prior this month also. And already the analysts and a lot of people with their abacus have been out, and they have been confirming this slight uptick. So I'd say look at it, core prices. If we start to print a 3 again, it may have a bit of an impact on the interest rates in the US, which have been coming down of late. Also, the headline number here is expected to remain flat. It could come out a little higher than expected on the basis of the numbers that we have seen. Also, keep an eye on the personal income and consumption numbers, because they still are going to, and they are especially going to be important for the second half and deeper into Q3, Q4. But still, keep an eye on those, whether to see if the consumer stays on top of things. We will also have again Q2 data out of Canada, but seeing the latest moves that we had on the dollar CAD, it could be quite interesting, because we have this double layer of data for the dollar Canada. Okay, so I will have an eye on that, and then we will have, and I think those are the final ones, if I'm not mistaken, the final Michigan consumer data and inflation expectations to close the debates on the main numbers that we have. Yes, we have another Atlanta Fed GDP now out, but that's going to be the 15th revision with another 50 to come. So I wouldn't attach too much importance to those. And then, of course, in the mix around here, we will have the final fixings of the month. And speaking about those final fixings of the month, let's first look at the currency pair that actually is one of the biggest movers for the end of this month, and it's euro sterling. From yesterday we were hanging on the open, we were hanging around the lows on euro sterling, and then look at this. This has really been a pretty thorough move higher. There is a bit of, and let me just show this one. There is a bit of this going on, which is a narrowing of the spread between the sterling and the EU rates, a bit of a narrowing. But I think the main reason for this euro sterling to go up is month end. I think that the month end flows really are dragging the euro sterling higher. So the thing I would say is watch the clock, okay, and especially watch the clock into noon GMT. Yes, we can have until the 4 p.m. fixing, obviously, but if it's Europe driven, it's especially going to be the noon GMT fixing. Watch where we are then. On my daily update, I said like we are around this high. It could be enough, but I would not rule out if these flows continue, that we are going to have a look at those higher levels here, add another 15, 20 pips onto euro sterling. It's all very possible in current context, and I do think it is has to do a lot with the month-end fixings going on right now. So keep a close eye on. We could have this kind of move, and then all of a sudden the bid disappear, and we could go lower. If this thing holds into the end of the week, especially to start next week, more is going on, and that means that probably the market is already again looking at all the bad things that are going on in the UK, thinking about taxes, thinking about Reeves, and etc. But I kind of think that this is month end, and that in the next give and take 2 hours, we may find a top in the euro sterling. Now, cable obviously has been pushed down by this serious rally in the euro sterling. So I would say pay attention to where we are again. Keep an eye on the clock, because we could be in for another couple of hours of move lower. We could actually. It all depends on the month-end fixing, and of course the US PCE continue to move down a bit. I thought maybe around 134.65 we should see a bit of support, but potentially not a lot of people are going to stand in front of too many moves unless we hit more important levels. Because if you are in a bank, if you are in a hedge fund also, you probably know what's going on, and if this is month end, you probably are watching the clock as well. So there is a possibility. That we are going for a revisit of this 134.20. It is possible. It will depend, of course, on those fixings and the US PCE. The outside range remains unchanged. Okay, still 133.65.70, 135.95, but keep an eye on that 134.20, because we had a pretty good bounce of it the last time we visited there. If ever we come closer to there. Interesting yesterday is that we held just below that level here, which is around 135.40. So this is one to keep a close eye on. If we get back up there at any time, maybe after those European fixings, also if the cable starts to pick up again as well. All right, so we have a bit of inside levels here, 134.20, 135.40-ish, but there's going to be a bit of work to be done, obviously, to get back up there. Maybe already around 134.90, 135.15, there's going to be a bit of interest found as well. But again, in my opinion, this is more to do with month end than really people wanting to sell sterling as such. Euro dollar. Well, we're still in the range. And as I said, there's a bit of positives perhaps on milder, let's say not positives, but milder numbers. We also know that the dollar is struggling due to these yields coming down. We will see the PCE. I think if PCE comes in as expected, it's not going to affect those yields too much. And then, as Mark already mentioned in our room, the US players having a long weekend, they may just watch the PCE and then close the books and go out on a long weekend, and then we will only have to watch the final month and fixing come around 4 p.m. London time. Anyway, we are still in a range that has not changed for a bit, okay? But we're holding that midpoint for the time being. So that is, we're not far away. We are like 15 points away, but we are holding it for the moment. So that will be, in my opinion, the first little level here, 55.60, to keep an eye on. Perhaps if we trade around there over the PCE data, that is the hinge of the day. Okay, if we get back down below there, we could make it back down to somewhere around 116.30. The number, if it really overshoots, could take us back down to 116, low 116s. Now, in general, I don't think, especially because of that long weekend, that people will want to really engage in strong moves and dragging stuff even to the top or the bottom end of the range, as we've seen. But okay, never exclude it on an empty Friday or so. Top side, 116.90. We just went for a quick look today and we shied away from it, which is also interesting. And then obviously those levels above there, and they aren't changed. It's still 117, 117.0515, 117 35.50, which will be mega important, but don't, because recall that long-term level 117.50 is still quite important. Okay, it's probably going to be, when or if it breaks, is probably going to be your gateway to get back up to the 118s. But for as long as it caps, we have to respect it. Okay. And then, as I said, quick look on the Canadian dollar. We are now trading bang smack on that 137.50 again, which is a bit of a level. Had a look below. So that double release of data, US and Canada, could obviously see a big move in the dollar CAD unfold. Now, um, perhaps this 137.75 is a bit close for comfort, but this is an interesting one, I think, around 137.90, because it contained the bounce that we had yesterday and bounces that we saw yesterday. So the first thing to look topside, and also lows here, is that 137.90. All right. For this to just be a correction, I think we have to break back above that secondary level here, which is around 138.1520. So this 137.90 to 138.1520 is an important zone for me for the dollar Canada. All right. If we get back above there, this will only have been a correction, and then we can actually point higher again. For as long as we are below there, in turn, the chances are, or the risk is, depending on which kind of position that you have, for a bit of a revisit of 137.20, and that's going to be the level too much to the downside, is 137.20, because it's a prior low here. It's also the 38.2 of this move. If we get back down below 137.20, it could be that we are on our move, on our way back to 136.5. And by the time we get there, this supportive trend line is probably not going to be too far. It's around 136.25 right now, but it's getting closer to getting back to 136.5. So it could be an interesting day for the dollar CAD. So that's why I really wanted to talk about this dollar CAD today as well. Another one that I'm keeping a close eye on is dollar Norway. 10.05, 10.04.5, 10.05. It is an important level. It has been traded very often in the past. It's been traded of late. It's still not breaking. All right. If it breaks, I think then we can knit another maybe 1 or 2% to the downside. So keep a close eye on where this dollar NOK ends up. And I would say after the PCE data and after whoops, what is that? And after the fixing, especially today, okay, because we could see a bit of a drag lower on the fixing and then all of a sudden the snapback. But if we are below there to close the week, I think the door would be open to a bigger move lower. Okay, the what is it here? The emerging markets are not feeling too well, and I'm just going to the dollar mix and the dollar rand both are pretty big still. We couldn't hold the low side of the dollar mix once more, and we're already back into the 1870s. Yes, it's still a range, but it's perhaps telling us something that the market is not yet ready to go and have another look at 1850. Okay, so it is possible, unless we're seeing really negative dollar numbers, that we could actually make our way back to slightly higher levels, back into the 80, 85 perhaps. And dollar rand is doing the same thing. Dollar rand is trading already back to this prior high. It just feels to me that those emerging markets are not really trading too well. It may have to do with risk, and I'm speaking about geopolitical risk there. It may have to do with geopolitical risk as well, and especially I would say, if you look at the rand, South Africa is still part of the BRICS, and they are not in the good graces of America, of course, right now. Um, Gold, silver, as I said, gold is still quite big, but but and this is a level that I actually lost a bit sight of. If you look at this setback here that we had from the highs down to 3100, the 78.6 comes in at 3419, and also the 88.6 of the latest setback is also coming on right there. So 341820, and that's where we stopped. And again, here I need to mention this China thing, because yes, we have the correlation potentially between what's happening in China and what's happening on gold. We have seen that very much in past moves as well, but has to be noted. And then I'm going to go on the shorter time frame. If you look at Asia, okay, if you go back just to the start of the week, okay, Tuesday, Asia did not really participate in the rally in gold. If you go on to Wednesday, China does not participate in the rally in gold. If you go from Wednesday over Thursday, not. If you go from Thursday over today, not. So the correlation between the Chinese yuan and gold, yes, it probably be there if Chinese yuan continues to weaken, because if the dollar, one of the currencies that Chinese and Asian people have been carrying for so long in so big amounts, if the dollar weakens against your own currency, you want to hide in something else, and gold is obviously one where the market has been or where the Asian market has been hiding for years now. Okay, but they have not participated in this week's rally in gold. It's rather happening in the US, the rallies in gold. So just bear that in mind, okay? I think if you come next week or so, and Asia starts to buy gold again, I think then we are going to really ramp higher. The US, hmm, I want to see it. Maybe we are going to print a high today again. I'm still a bit long, but maybe we are going to print a high again today, getting into the weekend because of geopolitics. But I'd say just bear in mind that China is not really participating in this week, okay? Despite the drop in dollar China. So I'm going to say just a tad cautious, right? It could be that if we get back below 34, we see a bit more correction here. I still think more medium term, very bullish. We are going higher still. That's what I think. But got to respect a few levels here as well, I would say. And it's maybe not a one-way ticket up to those prior highs, and then especially the 3,500. Silver stalled. We had this rally, and now it's coming back close to where the resistance is, and now it's gradually coming back a little bit. I still think it needs a better global picture that to really continue to go. I'm keeping my long-term smaller, long-term running long, but to add to it, I'm not yet overly convinced. Okay, could be that there is need for another move here. Okay, because we're seeing the sharp move and then it comes back. We're seeing a sharp move and then it comes slowly back. We could be in kind of the similar kind of scenario, bringing us back to 38 and a half or so. Uh, in the longer to medium to longer term, it's still bullish. There is nothing to changed about it, but just a little caution there in the shorter end. So what else do you guys want to see? I'm going to have a quick look at the dollar yen today. Um, hmm. Despite those sluggish numbers, we've seen less of a rally in the dollar yen lately. Has to do obviously with those lower yields in the US. Also, Japanese bond markets being a bit jittery. We know about the MOF surveying the bond dealers involved in Japanese JGBs as well. Market a bit cautious, maybe a bit of month end in there as well. And now it's over to the PCE. if we get a bit of a stronger reading on that PCE, dragging the yields up, we could have a test here of that 146.40, 45. Extremely strong numbers. Oh, sorry. If we get a weaker reading, sorry about that. If we get a weaker reading on that PCE data weighing on those yields, we could have a look at 146.40. The bigger level is still 145.80, 85. That's still the bigger level. If it goes below there, then we're probably going to have a look back into the 144s. But for as long as that holds, move lower, big move higher here, and then this range here. This range has been still trading. If it is still a valid trading range, we're probably going to continue to muddle around. Now, in the current context of the dollar, and that's I was front running my own ideas a little bit there, my line of thinking. Current concept of dollar, it's going to have to be a solid beat, I think, to get it back, lastingly back above 147.80, 148.15, give and take. It has shown to be a relatively decent resistance of this in this range. So unless we see a solid beat of the number versus expectations dragging those yields higher, it may be a tough nut to crack to get above 147 80, 148.15. If in turn we really get above there and hold, maybe also helped by yen crosses or so, then could be this time that we are going for a revisit of 150. I find this 147.80, 148.15 zone now relatively important. Yes, there are those prior spikes, but this is the one that really has been trading quite often, and that's going to be an important one for me there. Get through this 148.15. We may not stop around at the 148s. Okay, so this is the way I look at dollar yen. I haven't been trading dollar yen for quite a while. But let's say that I'm putting it back on my radar from a distance right now, okay? Unless we continue to trade those ranges, then I'm going to just continue to ignore it. Ali, you're short euro sterling at 45, stop loss at 85, take profit at 86.05. Yeah, I told you about the euro sterling, okay? I think your 86.85 is a bit is at risk just because, I mean, if we don't get there over the next 2 hours, it's going to be okay. But look, this trend line, last time we stopped around the trend line, um, it's coming in a little higher. I don't know how much you can spare. I'm not telling you what to do, but it's potentially just a little too close because that fib, that 61.8 is just above where your stop is. But I leave that um, up to your appreciation, of course. I know what I'm going to do. I did re-enter just a very tiny short one, and I'm going to try if I get a better level to add and then see what happens. But that's going to be above 87 for my own position. But yeah, a bit close that 85 there. What else? You cannot pay for losers if you don't write the winners. What say you say about? Yeah, but it's Michael Marcus. So the line is Michael Marcus says you cannot pay for losers if you don't write winners. Um, isn't that like kicking in an open door? Uh, if you if of course you don't have better winners than your losers, you're not going to be able to keep your account running. Yes, it's a true truth. It's a true truth, Ali. On that note, guys, I'm going to thank you for being with me for this end of the month on the Flow Show. I hope I helped you a little bit with the levels, with my line of thinking, perhaps. Um, don't forget about those discounts for those who are not yet in our room. It's worth it. A lot of people have been putting on like really great trades this week, and it's really great to be in that community, especially if you're a retail trader and you're sitting at home on your own. It feels like being part of something better than just sitting on your own and watching your little pictures, as beautiful as they may be. Have a great weekend, everybody. For those from the States, have a very nice long weekend, you slackers. And we see each other on Tuesday For those who are in Europe or elsewhere, there will be a flow show on Monday, so do not despair. We will do the flow show on Monday. Ryan is back for the flow shows as well. But there won't be a face show on Monday due to the US holiday, okay? And that's it for me. Thank you very much. Have a great weekend.